Hello, ladies and gentlemen. Welcome to episode 6 of Fijim India Mutual Fund presents Live Main Amend, Adjust, Adapt. This has been a series of high-powered panel discussions where we unravel many of the success mantras for the new normal in a post-COVID world. We've looked at various issues from leadership to what needs to be done. Today, we're going to look a little bit in the future. India at 2030. Yes, this pandemic has struck us, but 10 years later, will India have recovered? Will India be a global power? Will India have solved many of the issues that we are dealing with so much? So that's what we're going to try and address. I'm Vikram Chandra, founder of Editorji, and we're going to be looking at India 2030 ready to break out. What is it that India needs to do to be a leader? How do you see the overall global environment when it comes to economic and financial terms? I mean, the question, for example, I mean, we look so closely at fixed income, that there will be low interest rates for all time to come or for a long period of time to come. The fact that globalization is going to continue to roll out, or the sort of reversals that we have seen in recent times, will those continue? What is your sense of the overall financial perspective into which India should think when it comes to leadership?
Sure. So when we look at, let's say, what could happen over the next, let's say, 3 years, 5 years out from here. One is, again, if you have to take a step back to see, how India did, particularly, let's say, if you look at, break up the 2000s into two decades between, let's say, 2000 to 2010 and 2010 to 20. Definitely the 2000 to 2010 period was a golden period for India. Particularly the 2003 to 2008, in the years just before the global financial crisis, were a great time for India because a lot of things fell in place. One is, most importantly, I think the global economy was reflating. Global demand was up. And as a result, India did particularly well. Exports, which was a very, very strong engine for India at that point of time, also helped to power GDP growth. 2010 to 20 was really a period when, we were really recovering from the aftermath of the global financial crisis. And that is probably a period when I would say we didn't get too many things right. Because one is, immediately post the crisis, there was a lot of stimulus which both the RBI and the government had to give in 2009 to 2011 period. We had a period of very high inflation. And then subsequently, of course, we did have a brief period when the economy did well until 2014-15. But after that is really when the problem started for India from 2015 to 2019. And really the biggest problem, which has impacted India locally, I would say, has been banking. And today, if I have to look at, what India can do to really get to a position of strength maybe in the next 5 to 10 years. And I think the single most important thing that India needs to address locally has to be banking. Because unless we address that issue, I think it will be very difficult for us to, let's say, address the issue in manufacturing. So again, just to give you some bit of perspective in terms of numbers. So today, when we look at GDP, for instance, when we look at nominal GDP, India has had a nominal GDP in the band of about 12 to 14%. In the 2000 to 2010 period, and also for the first half of the last decade. But nominal GDP is nothing, but it is really effectively the credit growth, which banks are able to achieve. So if you look at, what banks achieved in that period in India, the average credit growth or the loan growth that we look at the banking sector was also about 12 to 14%. So in the long term, there is a big correlation between nominal GDP growth and the loan growth that banks are able to achieve. Today, if you have to look at what banks have done in the last 3 years, banks are struggling to even achieve 5 to 6% kind of growth, which means there is no loan growth happening in India. And that is really a problem, that is because of the credit cycle that we have seen in the last 4-5 years. The credit cycle has been very long. Banks have taken a lot of time to clean up their books. And the problem again here is because 65% of banking in India is still controlled by PSU banks. And the most important thing that banks need today is capital. And that capital has to come from the government. And because we know the fiscal position of the government is stretched, banks don't get that capital, which is why the credit cycle has taken so long to clean up. Banks have taken so long to clean up. And till banks get that capital, maybe in the next 1 or 2 years, we really will find it very difficult to power growth to come out of this pandemic and go back to those 10 or 12% nominal growth levels. Which is why for the next 10 years, I think if there is one single problem that India needs to address, it has to be banking. And if India gets banking right, I think everything else will fall in place because, we've had good exports in the past. We've got manufacturing capabilities. We've got technology. And I think everything else can be addressed. But the single, I would say, the elephant in the room has to be banking.